U.S. markets have started a broad-based sell-off with major indices losing over 1% on the day for the first time in quite a while. We've been seeing that for the last 6 months or so since the U.S. election that there's been a massive seasonal rally underway in U.S. indices. We're reaching, however, the middle of May, which is often a time that coincides with the seasonal peak for stock markets. There's a reason you have the old saying, sell in May and go away. And we're starting to move now into what's historically been a more volatile and weaker period of the year for stock markets. At the same time, we're seeing a lot of political tensions and distractions ramp up in the United States, and that appears to be forming the trigger to spark what we could be getting a seasonal correction and perhaps a deeper sell-off in U.S. markets. In terms of drivers, I think one of the big things was that we had this Trump trade idea that he would come in, he would bring in sweeping reforms, that everything would go smoothly, and life would be wonderful for companies and the economy. However, we're seeing things aren't working out as the market had originally planned. He's run into a lot of opposition. There's been a lot of political turmoil, and the more recent political turmoil has created a lot of noise that's really distracted both the president and Congress away from the economic agenda. On top of this, we're heading into a summer where we could get into even more contentious debate. We've got the potential for a budget showdown in September, a possible government shutdown in September or October, and there's talk that they may want to try reopening NAFTA negotiations in August. So even looking past the most immediate turmoil in the United States, we're still looking at a tumultuous period politically for the U.S., probably running for the next 6 months. So because of that, we're seeing capital actually starting to move out of risk markets, move out of the United States, working its way back. Now, we first saw the breakdown in the U.S. dollar index. If we look here, it peaked in March. Stocks had generally held up since that March 1st peak, but the dollar has actually been trending downward for quite some time here. And we're actually seeing it break down, particularly in the last week or so. It took out 98.40 and it's now down around testing around this 97.50 to 60 area and trending downward. Meanwhile, if we look at the Dow, we're going to see that it started to roll over. We've got the peak here March 1st, a double top late April, early May, and now it's starting to roll over. And we've been drifting sideways for quite a number of days. And today's the day the bottom's fallen out. It's taken out this 20,875 level and plunge. On top of that, taking out the first line of support, its 50-day moving average. On top of this, look at this, breaking 50 on the RSI. This is the signal that momentum's turning back downward as well. This could come back. Next support zone that's 2,600, that's 2,400, probably possibly in back in there somewhere. And what's most important also is that we're seeing not only breadth, but we're also seeing that we're seeing declines take place across a number of markets. If we look here at the S&P 500, a little broader index, similarly, we had a double top. We've had an inability to hold above 2,400. Today, big red candle, the bears. The bulls have been losing strength for quite a while. See this big negative RSI divergence down here. Today, the bears have gained a firm control here, driven the market down, tested the 50-day average near 2070, and look at this. Again, RSI breaking 50, signal of a downturn in momentum. Next support's down here, possibly in this 2340 to 2360 area for the S&P. The NASDAQ had been the strongest for quite some time. Even recently, when the other markets had leveled off, this staged another leg up. But now it's run into resistance at 57.25 and bang, turned decisively lower. On top of this, massively overbought. Break of 70 signals a downward correction starting. Already back 23% of the most recent rally, around 56.35. Next support in and around 55.75. But the NASDAQ also looks like it's turning over. And something that's important here as well is that the NASDAQ traditionally lags a little bit. The NASDAQ is a late sector play. It's dominated by technology. And so when we were looking at, which is a late cycle sector, it does better at the end of the cycle than the beginning. Why is this important? Because for the last month or so, we've had the S&P and the Dow flat. We've had the NASDAQ going up, late stage cycles in play. And then now we're starting to see this roll over. And when we want to talk breadth, let's take a look at the Russell 2000. The widest index, and look at this. In fact, this had peaked in late April, and it's been trending downward for a few weeks now. 1400 became resistance. Today, it's decisively broken its 50-day moving average, continuing lower. Once again, RSI breaking 50. So we've had 3 breaks of 50, 1 break of 70 on the RSI indicators. All major U.S. indices are getting in gear and confirming a bearish technical turn in the markets today.